Buyers made new record highs again after sellers failed to capitalize on a liquidation setup last week, not even coming close to testing the lows from the prior week to activate that setup. However, the fear and greed index has been teetering on extreme fear now for pretty much most of July, and we have the GDP report for Q2 next Wednesday, I believe. So, would a surprise contraction kind of derail these buyers, or are they just going to keep climbing this wall of worry? Which at this point, there isn't even really worry to climb. My name is Lamont. I've been a full-time trader for 8 years now, part of the Chart Guys team for more than half of that, where I head up our futures room in the swing report. In this video, we will cover all that and more. So let's get into it. All right, so starting off with SPY, if you recall, last week we were talking about the potential that the sellers could set up a bit of a liquidation break here because we had these three candles very close to each other, and then this is pretty much just one-way trade. So if you had cascading stops here all trigger at one time, or rather in succession, and then enter this one-way trade, that could have been a pretty squeezy situation. But unfortunately for the sellers, the open was pretty much at the highs of the prior week's range. And then you can see on Monday's trade over here, it was notable that you got some long liquidation here, right? So you opened up pretty much in the middle of Friday, rally up. There was no acceptance at all over the high. And that's essentially poor location longs getting liquidated. But as we've been discussing since the April low, what do we always care about? We always care about what kind of change is created. And so just like on the daily time frame, we're looking at, all right, well, can these prior highs be negated? If not, then these buyers are doing just fine. The same logic can be applied to the session to session perspective, right? If these sellers can bring price back under the prior day's range, great. That means that the day plus sellers are playing defense. They're not allowing the day plus buyers to be affirmed by holding over the prior day's high. But on the daily time frame, what kind of damage do they create on the next session with an open over here, a drive down under the daily no change level? The move under the daily no change level is the sellers attempting to negate this breakout on July 17th. And if they can't even hold under 627.86, then of course this breakout from July 17th continues to be affirmed. And so there was very little acceptance. Did not even get to the value area high of this local daily demand, set a daily higher low, and then boom, just ripped to new highs. Now that being said, it is still very likely short-term operators are in control of this market because you're seeing a lot of buying come off of like very specific levels, right? Levels that big money doesn't really care about. For example, Wednesday's low, 629.73, was exactly the high of Tuesday's session. So again, big money doesn't really do that. It's really day time frame operators, day traders who wait for those back test levels, like those very clear regular trading hours high, regular trading hours low, overnight high, overnight low, the open, the prior day's close. Those kinds of levels are particularly meaningful for short-term operators who are just trying to assess whether or not there's still momentum, and they'll be willing to join the momentum as long as it's present. But if it's not present, then they'll just bail on that. So what does that suggest? That suggests that we're probably still dealing with poor location longs. So the potential for that liquidation is still there. And again, the GDP report will be released on Wednesday. Most of the estimates suggest that there will not be contraction. So I'm talking about um, uh, the Atlanta Fed, their GDP model, and then also um, I forget the conference board, IMF. Basically, nobody really expects a second successive quarter of contraction, which would technically be a recession by many economist standards. So that does create the situation where if there is a surprise contraction, that could derail buyers, at least in the short term, where people would reposition because again, it's always the surprise that can kind of shake up the market, right? It's the uncertainty that comes from a surprise that has the potential to shake things up. Now, that being said, just like we were talking about last week, even if there was going to be a liquidation break, it's not really a big deal for these buyers, right? As long as they can hold over, ideally, the prior all-time high. Next best case scenario would be to hold over the value area high of this prior all-time high structure, and then the point of control 604.83. So we have these three key levels to just keep monitoring. And even if we were to get some long liquidation, whether that be off the back of GDP or for whatever reason, just a technical break, if these sellers can't get back under the prior all-time high, it's really no problem. Now for closer references, our primary level is going to be 623.52. As long as we're holding over 623.52, well then this area of local daily demand, you can see how there's a good amount of value established here, is going to be affirmed as demand. And as long as this guy is being affirmed as demand, there's really no problems for these buyers. And we're so close to the yearly R1, and Bitcoin hit the yearly R1. And like you look historically, you know, how often do you do you test the S1, get back over the pivot, and then miss the R1? It doesn't really happen that often. Like if you're over the pivot, very often we get to this R1. Here was that 2022 was that down year, so we don't reach it there. But like practically every single year in the S&P, you hit the R1. It's not every single year, but man, okay. So going back to 2016, so far they've gotten it every single time. So from 2015, before the 2022, 2015 was the last time it didn't happen. So it's a 7 year, 7 year difference. And then before that, it's right back to it here, right back to it, right back to it, right back to it. That's all the data that we're getting right now for this, for TV. But the majority of the time, you do reach that R1. So I'm thinking, yeah, and again, even if we were to retrace all the way back down to here, this is technically the last area of local weekly demand. So I have a hard time seeing us not get there. We shouldn't be making predictions, but I get the sense that because very often the market is, what is the ruling reason? You ask yourself what the ruling reason is, and sometimes the ruling reason is just bid it up. And so anyway, that's what I'm thinking. As long as we don't get under 623.52, I see no red flags at all for buyers. And even if we're gonna get back down here, that's the big one. Okie dokie. I think we could like even pull this up. I think if we do retrace here, even if we tag the R1 first, again, as long as you hold this guy, they should be trying to get back up here. So I think this is a pretty reasonable trade zone for the near future here. Moving on to the Qs. So for the Qs, same dealio. It's so close to the yearly R1. I have a very hard time seeing it not get there after getting so close. Of course, it can happen. I'm not making any predictions. I never know what's going to happen. Nobody ever knows what's going to happen. I only know where I would be willing to place bets. That's it. And typically that's going to be based off of what has just happened, right? So if something has just occurred, we've just built an area of demand over here, then I'm willing to bet that if we have extension into this location and if we hold this guy, then we should try to get back up here. So I'm willing to play as a buyer in here, playing to get back to the R1, and that's really it. So lots of space for daily higher low. Anything over 558.61 will be good for one. The daily no change that I'm considering right now is 560.80. I consider that the high of this range here. I'm just using this high here. Because this is this high, when it broke, you fell right back into range. On this high, when it broke, we fell right back into range. But then when you broke over this high, then you found some acceptance above. So I'm just kind of viewing all of this as kind of one area of balance. I'm applying that same logic here for the SPY. I'm picking this high at the daily no change level because again, this break didn't see much follow through, and then the break over this high is what saw some good follow through. So that's a bit subjectivity, but nothing's perfect. Anyway, that's pretty much it for the Q. So I think we can pretty much use a very similar concept here, right? If we come back test this area where a lot of demand was established, where a lot of value was established, if we hold this structure, I think we probably should just balance sideways at worst. So I think that's pretty reasonable. Okay, moving on to the rut here. So for the rut, I have this white box here because I actually put a butterfly spread on Friday, and I cut it for flat because it just did not look like it was going to shake out, at least not by the day's close. And I just figure whatever, might as well just see what happens next week. I can just put that same trade on for probably the same cost, if not cheaper. Anyway, so this is notable, right? For the fact that the sellers rejected again from the point of control over here, and then this is the response that they were met with, is very notable. Like the goal for the sellers now should be to come back down here to 1940, just like over here. Now that being said, the buyers are not really out of the woods, right? This was a good defense off of this little 4-day demand over here, but we could very well still be moving down here, especially because if you look at how value was established, value was still overlapping to lower. Now, I don't love the fact that it's overlapping less, right? You can see how it's overlapping to lower here. This value area is lower than this value area, but it's overlapping, which is not ideal. but you spent the majority of the session on Thursday, I mean, under Wednesday's point of control. That did not really happen, or rather, that did happen, but in this on Friday, the POCs didn't migrate lower, so that's not ideal. And the overlap is much more, right? You didn't move as low compared to over here. So that was enough for me to cut the butterfly. Obviously, it started off quite well. Sell off the point of control of the prior session is very often a good play. But you know, that's not the response I wanted to see. Pretty much what happened was the sellers just pretty much held the next VPOG and then bounced very much from there. So yeah, that was enough for me to just abandon the trade. I'm interested in it next week. Like if we get another week open, if we get a week open under here, fine. I'll try to put it on again because they were dirt cheap. They were like 81 cents for a week out for what I do. I think I did 220, 223, 218, 213s. So that they were dirt cheap. Could have taken some off and just had a free trade, but I didn't want to like. This didn't seem like good R to me. I'd rather just risk it for the biscuit. Anyways, so at this point now, what happens next week for the rut? What we wanted to see is, are we going to come down here, test the value area low to 1940, or are we going to overcome 225.99 again? That would be a great look to overcome 225.99, affirm this structure over here as demand, would mean that these buyers are just a stone throw away from the all-time high supply over here. So let's see, we've got a trade zone in here. I think we can probably bump this up, honestly. Like it sure looks like these buyers are playing solid defense. Again, with GDP right around the corner, like maybe don't do this on a Tuesday, you know, like maybe wait until after GDP to see, let the market digest whatever the heck happens. But something along these lines I think was like pretty appropriate. Even something like this, maybe if you want to give yourself some more space to work with, something along these lines I think would be fine. Basically, as long as you're holding over this guy, then I think they should be trying to take out this structure. All right. All right, so moving on to the, whoops, that's not it. Moving on to the Dow here. I wouldn't change this Dow setup either. I think this is a very reasonable setup for the Dow. Flirting with an all-time high break here, and as long as you're holding over this area of local daily demand, again, these buyers really have no problems right now. Yearly R1 target 460.90 or so. I still think this is fine. Space for a daily higher low, a lot of space for a daily higher low. I don't care about this rinky dink one. There's a little gap as well. This is obviously these are just all good signs for buyers here. Space for a higher low over 437.64 and 444.89 is the point of control of this all-time high structure. So as long as you're holding over 444.89, and you can see how much volume was traded here, as long as you're holding over it, then you affirm this structure as demand. Affirming this structure as demand keeps these buyers positioned very well for a break into new all-time highs. The sellers had 3 sessions here. You know, they had a lot of opportunity to negate the breakout over this high, 446.01. They couldn't even backtest the high, and thus they couldn't fill the gap either, which means they can't even backtest this prior all-time high structure's point of control. This is all just good look for these buyers. Like, can things change? Of course, but we can only call things for what they are right now in the moment, and right now in the moment, buyers are fine. All right, so I think this is a very reasonable trade zone going forward. No change to the dollar either. You know, like I know these are like weekly videos, so a lot of the time there's not that much going on when we're dealing with a balance between 2 large structures, and that's kind of what the situation is for the dollar. I still think this is totally reasonable, looking for a responsive trade, just like this was reasonable looking for a responsive trade in this big range. We're like kind of here, right? Like what this price action over here is very similar to this price action over here, testing this key structure, right? And this was obviously the next most meaningful structure. When we fall from these highs, the next area of meaningful demand was over here. And so it's very similar, right? This is the next area of meaningful demand. And if these buyers do continue to rally, then just like this structure was offering support throughout all of this balance from 2022 into 2025, the sellers should now be interested in defending that structure as well. Basically the opposite of these trades over here. So no change to this. I think this is all very reasonable. This lower low back down under 97.130 is notable, but they didn't really find that much acceptance under it. So the key for this inverse head and shoulders, if it's going to shake out, is to not allow acceptance under 97.130, which essentially will continue to affirm all the demand that's creating the head. That's really what we care about when you're looking at an inverse head and shoulders or a head and shoulders pattern. What you should care about is the supply, rather the demand that's making the head for an inverse head and shoulders, and the supply that's making the head for head and shoulders. Like for example, over here, this kind of head and shoulders pattern, what should we have cared about if we were playing for this right shoulder here? should have been this, right? As long as these buyers can't overcome this, well, then that inverse, that head and shoulders, I should say, is in play, right? So that's pretty much it. Even this janky one over here, right? It's not ideal. You know, this is not an ideal inverse head and shoulders here, but as long as you're holding over this demand zone, no acceptance under this demand zone, you should be open to the potential of this right shoulder forming, even though it's like a janky right shoulder. That's really it, and there's no change for this for the dollar. Moving on to gold here, there's no change for gold either. We're just balancing right now, trading sideways. I still maintain this is the most reasonable place to be looking for continuation on this move because the larger trend has been higher, right? The gold is just breaking out, backtesting prior highs, breaking out, backtesting prior highs here, right? Breakout, backtest prior highs, and continuing the advance. So even over here, breakout, backtested prior highs and advance. So if you're a momentum style trader, a trend following kind of trader, which, you know, I think most people, most of the time, the trend following the trend is the right thing to do. So this is it. This is how you would do it, right? You just want to keep looking for, can this breakout continue to be affirmed? Will these buyers defend this breakout just like they did over here? If so, then fine. We'll just take these balance plays, responsive trade from one side to the next, chop it up, throw a stop under the low, and then see if these buyers can continue their advance. That's pretty much it. NVDA. So NVDA is also still just cruising here. At this point now, I think we have a new trade zone set up higher, correct? I still think this is fine. Like I would prefer to be a little bit more conservative with this, just like it took us a long time to set this up, right? This took a long time to set up. You know, we set this up way back when. Even this one, the first time we set it up over here, I forget. Nope. Nope. Nope, that was the original one. This one. Even this one we set up and it took days to set up, right? Weeks for it to set up. So, you know, when you trade off of these value areas, right, you never, first of all, you never even know if they'll ever get back there. But typically, because you need to see a lot of value get established first and then see a breakout outside of that area, you know, they can take time to set up. So I wouldn't rush this. I would prefer to just wait here because there's just such a clear area of demand over here. It's a clear gateway structure into all of this demand that was created over here. And so personally for me, for NVDA, I would just stay patient here. If you're a put seller, whatever, just keep doing your thing, selling like short duration puts a week out or whatever, that's paying. But if you're just trying to buy securities, I would just wait for a little bit of retracement here personally. All right, tons of space for a weekly higher low. This is pretty much a weekly stair step. Yeah, there's a little like dinky weekly higher low over here at 142.03, but I don't really consider that much of a pullback. I don't even really consider this much of a pullback. I would just consider this one big weekly rip up. So I would wait for some retracement for another play here for NVDA. Bitcoin, this is totally fine too. Like this is again, what do we care about? We care about what kind of change can the buyers or sellers create, right? So this was changed into a new all-time high, breakout over all of this local demand, test the yearly R1, which is kind of what has me thinking the NDX and the SPX will probably, ES and NQ, SPY, QQ, whatever, will probably hit their R1 as well, because Bitcoin hit it too. It should be the risk on asset. This is pretty much just a flag right now. It's super healthy consolidation, lower low, no follow through, good volume on that buy back up. I still think it's better like this though. If you want to be conservative, like if you want to be a bit more aggressive, then I don't hate doing something along these lines, like using this tool here for the developing tool, and then looking for a pass back over the developing value area low, play to the Depot, play to the Diva, and then hold the runner to see if this will confirm as a flag. That's fine. But a more conservative operator looking for some retracement plays, you're looking to be in here. It's very straightforward in my opinion. Ethereum, same dealio, right? Just like this setup over here was based off of this structure and this structure over here. This new zone that we covered last week, or I think it was last week, or this was on a stream or something, I don't know. Either way, this is where it's at, right? You clearly had a bunch of demand established here. If you hold over here, then they should try to get to the highs of this range again. So I would not change anything with Ethereum either. It looks totally fine. All this consolidation looks very healthy. And then finally for CCJ, again, really no change, right? We do have earnings right around the corner here on Thursday, so you probably don't want to do anything in here. Actually, that would be fine. This is so much of a retracement that, I mean, if you had a negative reaction from earnings into this area, you would have extension into the trade zone, and I would be fine with that personally. I think that's still a good setup, even if it's earnings that takes you back down into it. Excuse me. So that's really it. All right. So, for trade review here. All right. So trade review. It's not like a crazy week or anything. Kind of spun my wheels towards the end there, but I do have everything set up, so it should go pretty smoothly this time. So on 7/22 was the first day that I did anything. The 22nd was over here. And what I was interested in doing was, oh, I don't have the messages from beforehand, but in the rundown, I always like to talk ahead about what kind of trade I would be looking to get done. And on Tuesday, we're over here. I was thinking, we could potentially look to play back down to here, get back down to the value area low, get back down to the daily no change level because we just failed to get to the point of control. So I was interested in being a seller here. So at 9:58 is when I sold the pass back under the deval. And the development value area low was over here. So it's actually right here on this candle, but it printed lower after it closed. So at that time when I put the trade on, it was over here. And I thought that was fine risk because you could put your stop over the open. So at this point now, the sellers had already taken us below yesterday's range, right? So now the day plus sellers are in the mix. Very similar to the NQ setup that we did 2 weeks prior. Now that we're outside of the yesterday's trading, right? That should be the go sign for the day plus sellers. But if the day plus sellers are going to have any problems, it should be at the overnight low. So my thinking was just, all right, well, I'll just look for the ONL test. And so we do get that ONL test, but then I just stopped out the rest on the on this move higher. So chopped it up, give it 1.5, enough wiggle for 1.5 bar, allowed me to have the stop over the Depop and the open, but then just stopped out the rest. And then because we were not under the regular trading hours low again for the rest of the session, I just didn't do anything else for the rest of the session. And that was fine. So just a little chop and stop, small base hit. On the 23rd, okay, so on the 23rd, I was thinking, let's see, interested in a Depop play for potential higher low. Okay, so on the 23rd, that's over here. That's the next day now. So we're over here on the 23rd. And I was looking at this session over here, right? So on the 23rd, we had a gap up open, incomplete gap fill, which is a bullish sign, right? So here's the 23rd over here. So bullish sign to not fill the gap. And I was thinking, all right, if these buyers are going to press the issue here, they should try to get back to the point of control. So that was my targeting. And I'm thinking, okay, I call it ahead of time. I'm interested in the Depop play for the potential higher low in RTY. However, that play did not set up. So I initially wanted to see a Depop play after 15-minute retracement, but because the Depop was so high, it wasn't going to set up well for that 15-minute retracement. So I also say a few minutes later, I'm thinking either let it print lower or look for the 2280.5 backtest. The 2280.5 backtest is the point of control of this session here. 2280.5 is over here. It's the point of control of this guy. Why do I care about this guy? This guy is this session over here, the July 10th session. This is the session that tested the point of control, this daily point of control, and then rejected. And so what do these buyers want to get done is they want to flip this guy into demand because this is pretty much the gateway session into all of this local balance, right? All of this chop over here, this is the gateway into all of this chop. So I'm thinking, all right, if I'm not going to get that Depop set up, then what should these buyers try to do? They should try to defend the point of control of the gateway session. And you can see that the market already told us how significant it was before I started looking for that setup. So that's why I think, okay, if I'm not going to get the Depop setup, then I'm also interested in the 2280.5 setup. I would have preferred the Depop printed lower, but even if that 2280.5 level is affirmed, I think that would have been fine. And I just explained the logic of that. And again, that's at 11:11, so that's like over here. So I'm calling this trade out ahead of time. I think that's the best thing that we can do. It's like think ahead for what you're gonna do, and then also if you write about it, then you make it more tangible. You allow people to kind of comment on it, right? And if they can poke holes in it and you can't defend it, then probably isn't that great of an idea. I do think one of our Madam Stamos, he asked about why 2280.5 was meaningful, even though I explained it. So sometimes you just have to waste your time explaining to people who have difficulty reading. Anyway, just kidding. Anyway, people have jobs and whatever. I get you can't read every message. Anyways, so that was this play over here. So I just buy that pass back over 2280.5, and I gave it enough wiggle room, looking for the depot, this over here, for a chop, and gave it enough wiggle room for 1.5R, and so that was fine. And then my next exit was the overnight high, and it was pretty much also looking for an exit at the point of control. It was pretty much the same level. So that's it. Chopped it up again at the ONA. It was actually, I did a meme exit because eights are lucky, and like I don't really believe that very much, but eights are lucky in the Chinese culture, and so I just took it off at 2288.8, which honestly was worked out quite well there because the top tick was 2288.9 on that move. So chopped it up, and then stopped out the rest on this move lower, which is kind of a bummer because they did rip some more, but what are you gonna do? And then that was it. And then for 724, so now is when I start spinning my wheels a bit. All right, so for 724, let's see, 724 is over here. Over here. So 724, we had a pretty strong open, if I recall correctly. I think it was a gap, right? 724. Yeah, it was a gap up open. So it's a gap up open. We're like pressing new all-time highs. Market has been pretty strong. So I thought, all right, let me just try an aggressive buy off of the open. Because if it's gonna be a trending day off of the open, then those are some of the best days. Like for example, this gap and go, or like this gap and go, very little retracement, incomplete fill, and then go. Is that the one that we captured recently? I forget. We captured one pretty recently. I think it was this day. We captured this day pretty recently. So days like that, those are great. But we didn't get fall through on it because, well, we just didn't get fall through on it. There's no other reason than that. But I just bought the open and then look to chop it up at this point of control here because it was the point of control of this session. So similar logic, right? This 721 session was the all-time high session on that day, or yeah, yeah, on Thursday. This was still the all-time high session. So I just bought the pass back over the open, chopped it up at that point of control test, and then stopped out the rest. Whatevs, no biggie. And after that, at the same time, during the morning rundown, I talked about both of these trades. These were the two trades that I was interested in, but I kind of made an error because I didn't really have everything planned out well for the rut. I didn't measure it out for the rut. So for the rut, I ended up selling the new 1 minute low over here, and I was looking to play to the low of all of this balance from yesterday, which was 2276.6. And I didn't realize that it was actually only 1R because I was looking at the 15-minute chart. So I was looking at the 15-minute chart over here, and I just kind of eyeballed it. So we were over here, and I was thinking that this was more, about at least 1.5 with a stop over here, and that was just not correct. So that was a bit of a red flag on the play. I didn't love that, so I called myself out on it. In timeout, however, it shakes out because the R was only slightly better than 1R. I just jumped on the YPOC failure because this is what happened, right? We pop and drop. We pop and dropped over the prior day's point of control. So that's the setup that I was looking for. It's similar, pretty much the same setup that I was looking for the butterfly. And that was it, right? So that was just a mistake on my part. So I should have had that R measured out. Like I said just now, the best trades are when you call it out ahead of time, have everything measured out. That just tends to work out a lot better, especially because if you should even put that trade on. This was a clear mistake. I shouldn't have put that trade on because the R was just not good for it. So that was just an error on my part. I eyeballed them, just explaining. I could have had better location if I was patient. So like, if I had measured it out and I was patient, then I could have played off of this guy, for example, right? So like, I sold this new 1 minute low. And had I just been patient and measured it out, then I would have known, oh, okay, if I want 1.5R, then I need to be above here, right? So if I had just waited and let it shake out a little bit, I could have had way better position here and had appropriate R, but I didn't do that. In fact, I could have waited here at the prior day special point of control again, set me up for 1.5R like this. That would have been a stop over the overnight high. I would have gotten to that target and it wouldn't have stopped me out. So, just a good lesson here to not jump the gun, right? I didn't have to be so hasty with that. And because I made that mistake, I kind of put myself in timeout right away because I don't want the last thing I want to do is start racking up mistakes in succession with each other and then start like messing with my psychology or whatever. So whenever I make a mistake like that, I just like to pump the brakes, which is what happened. Until I think later in the session, I was eyeing a pass over for the I bailed on this RTY though. I didn't take the full stop. Some like over here somewhere I cut it. Like over here somewhere. It was still a loss, but it was a very, very small loss. And I didn't assume the full loss because it just didn't look good. We just kept bouncing around the open, just didn't look good. So somewhere I say, let's see, I bailed on it at 944, so that's like over here somewhere. It just didn't feel like it was gonna work, right? Just and it, and I guess technically it did, but it wouldn't have worked with my stop anyway. So that was a fine bailout in my opinion. And I do think you should be open to that, right? Like I think it's good to be open to, once you realize you made a mistake, to not play the hope card and just jump out of it because it was an error anyway. Because the last thing you want to do is like do make errors, do bad trades, and then have the market pay you for it and then affirm your bad decisions. That's not good because then that increases the possibility that you'll like be willing to make a bad decision next time. So I was fine with that, bailing on it. Later on in the session, I'm eyeing the ES for a Depop play for potential 15-minute higher low. And that was because on this day, on Thursday, we're still like in, all-time high breakout mode. So I was thinking, okay, let me look for a potential 15-minute higher low over here. I was looking for a here. Yeah, it was this guy over here, right? So what I wanted to see was a hold of this back test over here, right? And look for ideally for like what was it, Depop play. So let me take a look here, and I'll bring these up. 724. It was here, right? So I was thinking, all right, I'll just buy this pass back over the Depop. It was dirt cheap over here. Buy this move back over the GPOC. It was a late buy. I didn't get it right off of the GPOC. And this was a bit of an error too because the range was really small, and I was talking about the range being small. Let's see over here. I said not a lot of range from 410 to 420, 410 to 412. So I wanted to play from 410 here to here, 412. That was my initial thinking, but it just wasn't a lot of range, so it didn't give me a lot of wiggle room to work with. But then I saw how cheap this Depop setup was, so I ended up just going with that, trying to play the Diva, and that just failed. That it didn't even get a chop or whatever, but it was dirt cheap, and it didn't put a lot of size on because I wasn't terribly confident in it. And that's another thing, right? You should adjust your size based on your confidence level. So I didn't feel great, and I had just made that mistake, but it was so cheap that it's hard for me to pass something like that up because I could get a pretty cheap free runner, right? Free roll if we do get that Diva chop, but I did not. Stopped it out. And I was talking about I could have just used limits, right? Like even though this range was no good, I realized afterwards that like if I had just set up limits, it would have been fine, right? I would have could set the limit off with the 410. Look to exit here, give it 1.5 R, would have been fine. 2 R, right? 1.6, whatever, would have been fine. Would have got there. Could have had a little free roller. It would have still stopped out, but it's what it is. So stopped it out, and then that's it. And I just told myself that's what I get for playing in tiny range because I was late to the jump. If I had gotten right over the Depop pass, then we could have played to here, and that would have been fine R. But I didn't, so I couldn't. My cat's snoring. I don't know if you can see. He's in his little hammock over there. Oh, the microphone's blocking it. Okay, never mind. He's snoring. Oops. Oh, I've ruined this now. Oh, it's so cute. It's tiny little snores. All right. So what are we doing here? All right. So finally for 725, what do I do here? For IWM, whatever, that was like a nothing burger trade. So I put out butterfly on because I stream on Friday mornings for our community, so I don't like to do futures because it just takes a lot of attention away. I'm like talking about all these other things or whatever. So I just put a low risk butterfly on. It was for like 80 cents a spread. Targeting over here, and at first it was great, but by the end of the session it looked terrible, so I just ended up cutting it for flat. And then also from a futures perspective, I did like a kind of little chop and stop, I think, for the 25. Let's see here for the NQ. Let's see, what was that for the NQ? That was this. What? Pass back over the overnight. Oh, right. I just need the daytime from references to come back here. Okay, so I buy this pass back over the overnight high here, and then I just have my stop under here, and I was looking for an exit here, which is about 1.5 R. Well, it is 1.5 R. Looking for the exit at the point of control of this local area of supply here, and I was thinking, all right, well, these buyers have defended the overnight high here and here and here. So I thought, okay, maybe they'll try to keep affirming it. So I tried to make that play here. I stop it out, full stop, but it was pretty cheap, 7 points. And then I was gonna walk away, but then this setup presented itself as well. So at first I see this diva pass, and I measured the R for it, and it was no good. So I was measuring it like this guy first, and I was thinking, all right, I see this candle come down. I'm thinking, all right, if we pass back over it again to get to the diva, it's only 1R, so I passed on that, and I was gonna walk away. But then I saw this little dip down, and that was dirt cheap. So I bought this pass back over it, chopped it up at the overnight high, and then stopped out the rest on this next candle. And then we did get some more follow through later, but I didn't get to enjoy any of that. And that was it. That was the whole week. So whatever, some decent base hits. And the start of the week was much better. I gave back probably more than half of it by Friday. But whatever, that's trading, right? So anyway, that's pretty much it. And I'll be completely honest, it's not good trading. Like there were much better setups for like aggressive buyers, but I just haven't really been pulling the trigger. And then a lot of the setups have been occurring when I usually eat my meal, so that's kind of a bummer. But like there was some really nice Deepak setups on Friday, I think. Yeah, this was for like the initial 15-minute higher low here. This guy over here, super cheap Deepak setup, and it was for the first or the second 15-minute higher low after the breakout. Right, so that's where that setup occurred. It would have been to affirm this breakout over here. And for the NQ, I think it was the same. NQ, you had some really cheap Deepak setups as well, I thought. I mean, that one is a cheap one. These are all really cheap. And the first one, you could have held the whole time. So, bummer, but whatever. There's some streaming and stuff. So anyway, that is pretty much it. If you've made it this far and you wouldn't mind hitting us with like and subscribe, we'd appreciate that very much. Helps us out a lot, costs you nothing. If you're interested in getting trade zones sent to your email, I'm cooking with something right now that seems to be super promising, that I'm planning on like combining all of my long-term efforts for. Like I'm very interested in making plays for AI build out. And I think I've just developed a system that is really easy to execute, a trend following system. So I will be deploying that in this report. So if you're interested in, getting trade zones sent to you and potentially learning how to trade this system that I've been back testing furiously now, the results are really good. I'm gonna start trading them live. Check out this report, links in the description below. And if you want to figure out the ropes, learn how to trade, hang out with a bunch of knuckleheads in a trading community, links in the description below. Check it out. Otherwise, appreciate y'all tuning in. Thanks for sharing some of your time and energy with me. Hope you enjoy the rest of your weekend, and I hope to see y'all next time. Farewell.